In this video, guys, we are going to look at time-tested rules to keep you from blowing up. Stay tuned. Hey guys, welcome to you. Thank you for joining me. Okay, so time-tested rules to keep you from blowing up. Just 7 rules. Wow, this is a huge topic. Each one of these is probably hours worth of discussion and thought and dissection on its own. You just watch these videos and hopefully the idea is that you're going to get a little bit of a nugget of information that you think, you know what, that makes sense. I don't tend to have all the answers, guys, but if I can give you some useful advice that I've learned along the way that maybe helps you accelerate your learning curve, then that's exactly what it's all about. All right, so first thing is watch your size. I think most people trade too much size for the account they've got. And it just amplifies emotions. It amplifies everything. Margin amplifies your money you're gonna make when you're right, the money you're gonna lose when you're wrong. And amplifies your emotions for that, joy, sadness. And so just dialing that down and being very mindful and cautious about how much you're trading, and earn the right to trade more size. Respect the journey and prove to yourself that you can trade more size. If you just dive straight in and trading big size and stuff, it's almost disrespecting your journey, if you like. Now, I've got to be careful. I'm not saying this in a derogatory way, but in your mind, you're kind of saying, well, I can just trade big size straight away. I don't need to prove myself. Whereas, when you kind of go through the journey of trading smaller size and you've proven and you've got some track record there and you've got some longevity and you've got some resilience to draw down and all this stuff, and you've kind of tested a few different markets, you feel like, okay, well, I can trade some more size now. I know not only have I had good performance, but importantly, I've also been able to recover from drawdown. I've not done massive damage to the account. I've gone through different phases and conditions of the market, bull market, consolidation, whatever, depending on what time frame you're trading. So I'm in as good a position as any to start turning that size dial up. And so that's something to consider before you do that. Just watch your size. And many people blow up because they're trading too much size. And number two, yeah, be aware of your emotions. Huge topic. I'll just touch on it very briefly to guys. You've probably watched a few videos where we've gone into deep dive on this before, but if you just become more aware of how you're feeling, and if you feel like you're taking a trade based on emotion, that's probably not a trade to take. We'll leave it there for now because it's a huge topic, but just something, a simple rule is to be aware of your emotion. Number 3, have strict risk rules. It goes without saying, but just really saying, hey, how much am I prepared to risk in this trade? How much am I prepared to risk in the day for a day trader, the week, the quarter? Very simple, hard to stick to. That's again another separate rabbit hole completely. But just refining your risk rules really is for you if you're kind of newer to trading and you're trading away, whatever you're trading at the moment. Just taking a step back and going, well, how much am I really prepared to risk? What you don't want is to be in a situation where you look at your account and go, oh, I didn't really think that would happen. I didn't really expect to risk that. And then the emotions kick in, you start making decisions and you end up kind of doing some serious damage to your account. So strict risk rules. Number 4 is know your edge. Tricky one, this, especially if you're kind of finding your feet and getting some traction, to know where your edge is. And that's okay. It's okay to kind of still be feeling out where your edge is, but the sooner you start to dial that in, the better. And it can be reasonably broad to begin with. You can say, okay, well, I'm a day trader of SP 500, or I'm a swing trader of crypto, or I like trading mean reversion type plays in cable, or you start to refine it a little bit. And it's okay to be a little bit loose and fluffy around the edges, or frayed around the edges, but start to bring it in, and that will just help and help. When you don't really have an edge and you're kind of all over the place, that's when you can have a tendency to do some damage to your account. Number 5, take a break. Unusual one, this, but really it's so important to take a break. I think I've done a complete video, multiple videos on this before, but the ROI you get from stepping back and letting your brain think of something other than trying to perform in the next trade is huge long term. You stepping back gives yourself time to refresh and recharge, but it also gives your brain time to reflect on your performance and your trades and everything without it being literally clouded with make a risk-based decision, because that automatically is going to come to the front of the queue and it's going to say it's a risk-based decision. I need to take a trade, I need to take a trade. What's the trade? And you're not going to have time to reflect and to learn on some of the progress you've made. And so give yourself that break of, hey, there's no risk decisions to be made anymore. There's no monetary financial decisions to be made anymore from a trade perspective. So now I can consider my trading as a whole and think about the whole game. Number 6, have a max equity drawdown. This is for your literally your account size. Your account balance is growing and growing and growing. Have a point where you will stop and reflect, so that you don't go all the way up and all the way down. You don't want to see you pulling your account right the way up and then giving it all back and being surprised by it, because markets do that, guys. Markets do not go from 0 to whatever, the rocket, the moon, in a straight line. They will, maybe they will go to the moon and you are long, but they may well go back down 80% before they do. Amazon, great example. Go and look at the Amazon chart, IPO. I think it's 80% drawdown before it actually pulled back. So depending on where you are in the life cycle of the asset you're trading, you might have to stomach that. And the point is, do you want to do that? Or do you want to have a point where you cap some of the gains and then look to come in again at a later date? Planning and saying, hey, equity curve pulling back to here, I need to review and reflect. And the same if you're an active trader, performance is obviously off. So step back, don't do any more damage, come back in again. Something to drill down into if you're interested in that. Number 7, respect every trade you take. I think the biggest mistake, hands up guys, been there, done that, for traders is they don't respect every trade they take. Okay, you know what, I'll have a go at it. Yeah, that seems okay. And too many of those, you're just not respecting the risk that you're potentially taking. The damage you're taking to your mental capital, the damage you're taking to your financial capital, even when you go, oh, it's a little trade, it's a small risk, but you do that enough times and that can be damaging. So respect each trade decision you make as, yes, you know what, I'm happy to risk capital on this decision. I'm happy to go in at this and it fits my criteria. Let's go, rather than, you know what, let's have a crack at it. So anyway, guys, time-tested rules, I think, to keep you from blowing up. Hopefully this will put the brakes on you if you are struggling and things are kind of drawing down. I guess the final thing is if you are drawing down from highs and if you've had a good run, is to take stock of the situation, step back and say, hey, I may be down 25, 50% from my highs, but that doesn't matter. You know, I would absolutely prefer to be back at highs. Of course you would. But the point is, don't shrug your shoulders and go, well, I've lost that much, I may as well put the rest on the table. No, no. You know, you've done this good work to get to it. Fine. Drawdown can happen, and that's an excessive drawdown is 50% of your equity, but it's still never too late to take stock of it and go, whoa, 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 hang on. How do I calm down? How do I just decide on how I'm going to come back? How do I refine my strategy, refine my plan, and adjust from there? So it's never too late to put the brakes on, step back, take the professional approach, and go, yeah, you know what? Hey, things aren't working. How do I dial myself back in? So anyway, those are time-tested rules to keep you from blowing up. If you like this kind of stuff, thumbs ups, always appreciated. Take care. Bye-bye.